today for the Bitcoin price straight from the Michael Saylor 100k party. I mean, look at this. This is really absolutely insane. And guys, you will not believe me who I was just talking to. He is standing next to me here. I have breaking news to share with you about a Bitcoin strategic reserve of the United States of America. Where to get these breaking news better than at the Michael Saylor 100k party in Miami? Dennis Porter, my dear friend, can you share these breaking news with us? Maybe you come over there.
Absolutely. I mean, we have a whole list of states that are getting ready to introduce strategic Bitcoin reserve legislation. We've already done it in Pennsylvania, Ohio, and Texas.
Blue Chip Crypto 3. Buckle up. We're headed to the moon. Now, welcome on in. We are doing an audio reaction video to this Michael Saylor Bitcoin 100k party that he had in Miami. Also, what's following next after this slide, we're going to do a little bit of impact theory with Michael Saylor himself. We're going to talk about the revolution of Bitcoin.
And we're going to have a whole lot more. But beyond that, we're helping the federal government by crafting a model executive order that we can have Trump sign and ultimately take the 200,000 plus or roughly 200,000 Bitcoin that's sitting at the U.S. Marshals, convert it into the Strategic Bitcoin Reserve, hold it at the ESF, the Exchange Stabilization Fund, and make sure that we maintain our leadership as the #1 holder of Bitcoin out of all the countries in the world.
So guys, first of all, you need to understand these 200,000 Bitcoin or whatever it is, if they were to be auctions, if they were to be sold, even OTC, the news alone would drop the price so significantly. So that alone.
When Trump become president, when Trump become president on January 21st, right? And he does his crypto announcement, right? Do y'all believe that this is a buy the rumor, sell the news? Do you think it's going to be a pump or it's going to be a quick dump and then it's going to be a pump? Leave your thoughts down below. I want to know.
Is huge news. I know Donald Trump already talked about that at the conference, but now we see that it is finally going to happen and all the legal steps for that are going to be put in order. But are there, on top of what you just mentioned, any other steps potentially for increasing the Bitcoin strategic reserve in the future?
Absolutely. I mean, there's a whole number of ways that you can add Bitcoin to the strategic reserve without actually making any direct purchases. Of course, we would love them to buy it, but that's such a difficult step for the US government to be buying Bitcoin. But what they can do is the ESF, they issue loans, and those loans can be paid back potentially in Bitcoin. And we think that's a great pathway for us to be able to add more Bitcoin to the holdings of the US government.
So guys, think about the biggest potential buyer in the world, the United States government, are finally able to make Bitcoin a strategic reserve. Something I've been talking about for 8 years or so, mentioning price levels, and that is hypothetical, of a few $1 million per Bitcoin. These are the news which can make it happen over the next few years. Share, like the video. I will leave his link, his profile down below, and spread the news as much as you can. Repost. If you ever wanted to repost something, this is the video. Like it.
Okay, let's go on to the next slide. I just said to give y'all that quick update because this just recently happened in Miami, the 100k Bitcoin party. Michael Saylor threw it himself. Now, let's go on to the next screen, and this is the impact theory screen. We're going to actually do an audio reaction video. This is what this channel is about. It's an audio reaction channel that we talk about the blue chip cryptos like Bitcoin, Ethereum, ADA, XDC, XRP, XLM, HBAR, Algorand, just to name a few, Let me know if you guys can see the screen. Let's enlarge it. Buckle up. It's time to take off.
Million. And I think the short answer to your question is education. And with education comes adoption. And at this point, you just have 95% of the world that still doesn't quite understand what it is. And that means, I mean, the way Bitcoin marches from 100,000 to 13 million, and by that's for your listeners, you're referring to my long-term forecast. I gave that forecast in Nashville in July of this year, and it's based upon the Bitcoin 24 model. So the Bitcoin 24 model is an open source macro model of Bitcoin adoption and macroeconomic development over the next 21 years. Anybody can go to Google and they can Google Bitcoin 24. They'll find it on GitHub. You can download that model. You can plug in all your own assumptions, and you can check what we thought. But my forecast is Bitcoin, in essence, it's growing 60% a year for quite a while now, and I'm forecasting it will decelerate to 20% a year over 21 years. But that means on average, it grows about 29% a year, ARR. And that 29% a year for 21 years gets you to 13 million a coin. And so what do I expect to happen? Well, I expect lots of high net worth individuals that previously thought it's too risky or it's too scary. They see it legitimized by BlackRock. Now, BlackRock is giving guidance that you could have 2% of your portfolio in Bitcoin. And they're seeing the ETFs like IBIT, and they're noticing that these are the most successful ETFs in the history of the world. And BlackRock has got the most successful ETF ever launched. And now they're seeing the world's largest money manager, BlackRock, with more than $11 trillion of money managed. They're seeing them publish scholarly, thoughtful, responsible white papers on portfolio allocation. And instead of the 60-40 model with 60% equity and 40% bonds, now you've got 2% that they're saying you might want to put into a crypto asset like Bitcoin. So,
see, a lot of people may not understand what he's saying. So let me break it down to you. That's why we have an audio reaction channel. Now, this is also an educational platform. So basically what he's saying is that in order for most people to get what's going on in this world, you got to educate them first, right? You got to inform them first, right? It's still only 1% of the world that knows about Bitcoin, that knows about cryptocurrency. It didn't have mass adoption yet. Maybe when we get to 3%, and then maybe we get to 7%, then that's when most people will begin to talk about it, right? Another thing, a lot of people, IRAs and their portfolios now, the government allows you to actually dedicate up to 2% of your portfolio exposure to Bitcoin, meaning that at first they frowned. They said that it was a scam. They said it was illegal. Now, since BlackRock, Grayscale, Trump being the president, which makes it crypto friendly, the crypto capital of the world, which will be the United States. Now they're saying, hey, if the people want to put in, they can put in, because that then allows BlackRock, Grayscale, and all these other hedge funds, or these venture capitalists, it allows them to use your money to then double down on Bitcoin. It's supposed to be, it's speculation that it's supposed to be the strategic Bitcoin reserve, and they're actually passing a bill for it. So which means that this will get adopted. The news channels, all I see them now is talking about crypto. If you go onto YouTube right now, every other commercial is about crypto. At first, I'd never seen it like this. I'm talking about ever. I will hardly see a crypto commercial. Now, you can't help but to see it. So which means that the programming has begun. Let's continue. We're only going to go, this is about a 2-hour lecture. So we're going to break it down, and I'm going to do 30 minutes of part 1, part 2, part 3, part 4, just for you guys to have the full context of what's going on.
I think that you've got that group of people that are finding it. I also think you've got institutional investors that are moving into Bitcoin more frequently now. A lot of them are big investors in MicroStrategy. A lot of them trade MicroStrategy options. And they have, MicroStrategy has been the most successful stock in the S&P index. We're not in the S&P, but we're more successful than all 500 S&P companies for the past 4 years. I think this year too. So we're getting the attention of mainstream investors. And that's bringing a set of new investors to the asset class, because when they buy our stock, we buy Bitcoin with it. I think the third driver is a bunch of Bitcoin standard companies. A lot of companies are recapitalizing their balance sheets on Bitcoin. MicroStrategy was the first, but Mara has done it, M-A-R-A, and Riot just announced they're doing it, R-I-O-T. And the most successful company in the Japanese stock market this year is Metaplanet, and they just did it. And Similar Scientific just did it, and they tripled their stock in very short order. So you've got like a half dozen companies that are recapitalizing to the Bitcoin standard, but you've got 60 companies that have Bitcoin, and there's a lot of companies that are getting more heavily involved. I think recently Hut 8 announced, Hut, H-U-T, and then Rumble, R-U-M. And so a bunch of public companies that are kind of, they're innovators, and they've got a fairly open mind, and they're flexible. And the really important thing about that, Tom, is when a public company adopts Bitcoin, they start sweeping their cash flows into it. But then after that, they may start issuing equity. And then after that, they can borrow money. So Riot just this week issued a $500 million convertible bond, and then they bought Bitcoin with it. And Mara.
Is this Riot Games?
No, Riot Bitcoin mining. R-I-O-T, Riot. And so Mara did the same thing. They did a $1 billion convertible bond deal, and they bought Bitcoin. And then they did another $850 million bond deal 2 weeks later. And MicroStrategy, when we announced we were going to pursue a Bitcoin treasury company model, we announced that October 30th of just this year. And we've raised, something in the range of $15 billion in the last 6 weeks. And so you're talking about large sums of money that are flowing.
I don't think y'all just heard what he just said. He's taken, let me break it down again for the C students and the D students, right? And the students that don't want to go to class, but they rather listen to audio. So what he's basically saying is that for the people that invest in his company, which is MicroStrategy has went up at least by 1,000%. MicroStrategy was just $60. When Bitcoin moved from 50,000 all the way to 100k, it went up to $400, right? So it went up a lot. He's using capital to then buy more Bitcoin, and then he's borrowing against the MicroStrategy with convertible bonds in order to get more Bitcoin, because he understands he's playing the long game. Like I say, Bitcoin is projected for every Bitcoin that you do not have, and you keep waiting, not financial advice, you keep waiting, that's $13 million that you don't have. So if you're playing the long game and you know the projection and what it is, why wouldn't you load up on it? Just a quarter of Bitcoin, 0.25, just a quarter of just one of them, you will be a millionaire in the future. Just a quarter. Not financial advice. You even have some people now, if you're smart and you know what to do, say for instance, you can borrow against, say you got a home, right? And this is not financial advice, but this is how I think. You have a house, take out a loan from your house, right? Or use your house as leverage. The loan may be, let's just say 8 to 9%. That's the average loan in the United States, right? You go buy you a Bitcoin. Let's just say that you took out $200,000 from your home. You go buy 2 Bitcoins, right? The annual return of Bitcoin is projected to be, I think, 29% minimum, right? To exponential value. It could be 200% gain, 300% gain year. It could double, it could triple. So I'm saying it all to say that if you have an 8%, let's just round it to 9%, right? Okay, let's just go say 10%, right? You borrowed, the interest rate on the loan is 10%. Bitcoin gained 29%. You're actually in the green and have a profit of 19%. That's just a quick hack. So imagine if you're doing that on a small scale, imagine what Michael Saylor is doing on a large scale with a whole bunch of money that he pays probably 0% interest on, fixed for 30 years. Holy. Let's continue. Let's continue. I just gave you some game right there, but let's continue.
I mean, much larger sums. It took us 30 years to accumulate $500 million in order to buy Bitcoin in 2020. It took us 4 years to accumulate $10 billion. And we bought Bitcoin over the next 4 years. But then it took us like 4 weeks or 5 weeks to accumulate the next 15 billion. So you would check off that box, which is company adoption.
Did y'all see the face of the impact theory guys? Like, what? I may be in the wrong business. This man just borrowed money from the United States government, took the money, put it in an asset class that makes more money than the interest rate that he borrowed, and he's sitting back relaxing. That's his company module. Whoa. Because life to me, especially this realm that we live in a materialistic realm. So it's all about the Benjis. It's all about the money, right? So if you find a hack in between that or let's just not say a hack, because a hack may have a negative connotation. Let's just say that you find, okay, you know where the money is going. It's like a river. You know where the flow is going. So what is a bank? You put a bank in front of the flow of things, right? That flow is considered current. When you put your bank in front of the current, it creates infinite wealth. Because he know where the money is going. He said, well, hell, this is God's money. The money is going to technology. That's one. It's going to crypto, which is money. That's two. So why not double down? That's three. And he made this whole nuclear reactor, as Michael Saylor called it, just from this itself. And it will nuclearly react. Great. He actually giving you the cheat code.
And then after that, you've got like institutional adoption, the endowments and the pension funds. There's now pension funds that are starting to allocate to Bitcoin, and there'll be big university endowments and 501c3s and insurance companies. And so that's another driver. And then you've got nation states. And of course, the news of the week is the United States Strategic Bitcoin Reserve. And the US already has about 1% of the Bitcoin. If they don't sell it, that's a big deal. And Donald Trump said, never sell your Bitcoin. And then he was elected president. But now you have Senator Cynthia Lummis advocating for a US Strategic Bitcoin Reserve. You have a very supportive cabinet, lots of cabinet members that have been pro-Bitcoin. And then Senator Lummis just posted a tweet just a few hours ago, having met with the incoming Secretary of the Treasury, Scott Bessent, saying that she looks forward to working with him on this. And presumably that means that he is also supportive. And we know that the Trump White House and Trump is supportive. He was asked on the New York Stock Exchange floor, I think yesterday, by Jim Cramer about it. Will you do something like this? And he said, I think so. I think we need to lead. So I think that that's also positive. So let's just say there's a lot of different entities in the world with capital. I mean, who doesn't want to keep their money? Who doesn't want more money? Right? Everybody wants to either keep their money or they could use more money. And so Bitcoin is digital money. It's the greatest digital monetary network in the world, but maybe it's the first example of what I call digital capital. It's money, just so I can help people not be confused. Money is a generic term, but it decomposes in the modern world into two elements, currency and capital. Currency is the dollar and the peso and the euro. That is the medium of exchange asset. It is designated legal tender. That means you can swap it without paying a tax bill on it. And it means it's liquid and fungible, and probably it's good for paying taxes, and everybody prices things in it. That's not going to change. The world reserve currency is the dollar. The dollar's been the world reserve currency since just after World War I, and in different forms. the dollar is getting stronger, not weaker. But there's another aspect of money. It's store of value. If I had a liquid fungible asset that was a store of value that I could give to my children's children, well, nobody thinks that's the dollar, and nobody in the U.S. thinks it's the dollar. Rich people in the U.S. don't have 50% of their assets invested in dollar bills. And what they do think it is in the modern world is they think it's the S&P index, like the Vanguard 500 or SPY or some index fund, or maybe they think it's real estate, and real estate's a store of value, but it's not liquid and fungible. So it's a little bit different. It's difficult to swap it out in units of $1 million every day. And so it's not quite money, but it is capital in that regard. And gold for 5,000 years was kind of capital. It was a bar of gold bullion was that long-term store of value asset that people use. Bitcoin is emerging as digital capital, and they're not going to use it as a medium exchange to buy a cup of coffee. But if you want to buy something to give to your granddaughter that she can't mess up, even though she's 3 years old, and you don't want to worry about it every day, and you don't want to trade it, and you don't want to worry about antitrust and whether or not there'll be rent control on the building or renting it out, you just buy her one Bitcoin and you put it in cold storage, and then 60 years from now, she'll be rich because the one Bitcoin will probably be worth 50 million or $100 million, right? And so what's going on right now is the emergence of Bitcoin as a digital capital network for the world. And the thing driving it from 100,000 to 13 million over the next 21 years is the adoption of it as a capital asset by people that have the wealth, have the capital.
All right. A lot of people in my audience are not going to understand why you can't just store your money in dollars. I have a whole type.
Let me explain why you cannot store your money in dollars. This is why you cannot store your money in the US dollar. It's called Rule 72, inflation, which means every 10 years, no matter how much money you have, slash it 50%. You have half the money that you had in 10 years, 50%. So you're actually storing your money on sand. They say when you build a house and you build something, you're supposed to build it on a solid foundation, right? What if I told you that the fiat currency, and this goes for all fiat currencies, isn't a solid foundation? Because you get hit with inflation, you get hit with with interest, you get hit with the money debasing at a certain rate, which means that you're losing money for holding money. Why do you think that when you put your money in the bank, right? Why do you think they don't give you any money? Because they losing. The bank don't really need you. I mean, they need you to lend the money out 9x, but they really don't need to give you the profit that they're lending out either. So I'm saying it all to say, putting your money in any type of fiat currency, which is the dollars, the yen, the pounds, the rubles, whatever you want around the world, right? It's actually, you're moving backwards. Now we have something called technology, which is called Bitcoin and cryptocurrency and or stable coins, right? And you, at least with Bitcoin, you don't lose value. You actually gain value every year. Minimum average is 29% every year. So imagine you putting your money in the bank and they gave you 29% return. Do you know how richer you would be? Like in 10 years, the fact that it's debasing at a certain rate, you will probably come out in the green, right? Now you get a tax incentives for you actually holding your wealth in cryptocurrency, which means that it's tax-free. So you beating Uncle Sam, right? You're beating inflation. You're beating deflation. I mean, you're beating debasing. So what does that tell you? You're literally getting richer every day. Let's continue. I wanted to break it down for the B and the C and the D students, right?
I read about it, but I'd love to hear why. How do you explain to people why you can't just put your money in a bank account or under your mattress in dollars?
The simple answer is the supply of dollars expands about 7% a year every year for the past 100 years. And what that means is that if you want to buy something that is a very scarce, desirable asset that the government can't make more of and that manufacturers can't make more of, if technology and capital and machinery and robots can't make more of it, it's scarce and desirable. Here's an example. An acre of beachfront property in Palm Beach, or a beachfront house in the Hamptons, or waterfront property in Miami Beach. That's a desirable place to live. You can't make more of it. And if you go back 100 years, you'll see that the value of that acre was $10,000. And you go forward 100 years, and that is about $10 million. And for those who are very quick at math, they'll realize that works out to 7% increase in price every year for 100 years. And that's why, that's why people buy houses for $100 million on the beach in Palm Beach. And my house, the house that I'm in right now, it was sold in 1930. And I have the deed on my wall. And it was sold for $100,000 in 1930. If you'd put that $100,000 in a vault and you kept it safe and sound for the 90 years, and if you took it out, it would pay about 8 to 12 weeks of my property tax on this house. Like you literally couldn't keep the house for 8 weeks. Go ahead.
Let me say it in my way. Tell me if this resonates with you. The reason that you can't store your money in cash is that the government steals your buying power by printing more of it. I find it's very sobering to look at it as theft. Does that resonate with you, or do you think I'm being hyperbolic?
No, you're correct. In essence, the inflation of the dollar supply means that your wealth is cut in half every 10 years if you hold all your wealth in cash. And it's the rule of 72, right? You divide 7% into 72. That's the half-life of the asset. So the half-life of your wealth is 10 years if you store it in cash. If someone gives you an asset you can invest in that goes up 7% a year, you're keeping up with inflation. You're not getting wealthier, but you're not getting poorer. You're just treading water, and if you're beating that hurdle rate, then you're getting a bit wealthier. So once you understand that, you can see that you can't preserve your wealth for long periods of time in a fiat currency. And the best fiat currency in the world, Tom, is the dollar. But in most other currencies, they inflate at 14% a year. And that means the half-life of your wealth is 5 years. But in a weak currency, like in Turkey or Syria or Iraq or Venezuela or Argentina, it used to be for 20 years, the inflation rate looks more like 28% a year or 30% a year. And we take example, the peso. The peso went from 1 peso to the dollar to 1,000 pesos to the dollar over 20 years.
Jesus.
Okay, so I don't, in America, you got to keep in mind, you're an American. You live in the greatest country of the last 100 years. America won every war, right? We were the winner of World War I. We got richer. We were the winner of World War II. We never lost a war. We were the winners of the century. Our currency lost 99.9% of its economic power over the 100 years. But if you went to Nigeria or like Germany, the currency crashed like 2 or 3 times, right? In Japan, the currency crashed, In Russia, it crashed last time the Russian currency crashed in 98. The Brazilian currency crashed completely 25 years ago. The Argentine currency crashed about 4 times in 100 years. So if you're an Argentinian and you're 30 years old, you already know what it's like to have hyperinflation because you lived the entire cycle. It's just Americans don't. And so if you're taking advice from an American business person like Warren Buffett or Charlie Munger, well, I mean, they didn't live through the Weimar Republic. They didn't live through the collapse of by the way, the currency collapsed in Venezuela it collapsed in Argentina, it collapsed in Brazil, it collapsed in Cuba, it collapsed in Russia, it collapsed in every single country in Africa. You see? And so foreigners actually get it a bit better, right? It's like the bank's going to take your money, the currency's going to zero, the government's going to promise you it'll be okay and tell you to put your money in the bank. Then they're going to inflate the currency, freeze your bank account, crash the currency, and then tell you it's worthless. That's what happened in Cyprus not too long ago, if you want to go and Google that. And so the real promise of Bitcoin is very simple. It's a bank in cyberspace that won't steal your money. And it's an asset that you can store your life savings in that nobody can debase or corrupt. And those are two powerful promises for the first time in the history of the human race. No one ever gave you those two promises ever before now.
Nope.
Yeah, the thing that,
and that's what makes it so great. So let's just say we went over 17 minutes. Let's continue. In fact, we're going to make this the part 1 of it. I'm going to do about 4 or 5 different segments of it. So let me know what you guys think. Just giving you a quick update on what's going on. Quick update on what's going on in the revolution of Bitcoin. It's here to stay. And buckle up. Make sure you subscribe to the channel. Hit that like button. Share this video. I'm going to leave the sourcing of these videos in the description. And buckle up. Put on your seatbelts. It's time to take off. We're headed to the